Hi everyone, my name is Mate, and this is my very first YouTube channel and its channel's first video. And this video will be about Paramount as a company and analyzing that company and to give an advice. Is it an investable one? Should you buy its stock or not? And so, by that, let's move on and let's start. So Paramount, probably most of you heard about it before as either CBS, Viacom, or Paramount itself. It's a very old media conglomerate, a really big media company. It has both direct to consumer and the old practically legacy business which is on the normal TV, and the direct to consumer means practically the streaming with Paramount Plus. So let's start to analyze the company with the last earnings report, which came out on 16th of February, which was 2 days ago, actually. It was, in my opinion, a really good report. The market, however, didn't like it. Maybe the market is short sighted with that company, but let's check it out. So, in the and last quarter, Paramount added 9.9 million subscribers. That's that's a really good number. And that's more than Netflix, much more than Netflix. Netflix was around 6 million, and Disney actually lost around 2-3 million subscribers. Now, Paramount is at, all in all, DTC subscribers at 77 million. From that, 56 million is Paramount Plus. The other is mostly Showtime. That 20 million is mostly Showtime subscribers. Later, Paramount will merge in the US Showtime and Paramount Plus. So that difference will disappear mostly. Another good news that Pluto TV, it's Paramount's fast service, like it's a free streaming service, also added 6.5 million global monthly active users, reaching nearly 79 million. So all in all, uh, around 150 million subscribers in D2C Paramount already has. Uh, okay, Pluto is not as much valuable as Paramount subscribers, but it still accounts really well, or it gives a lot of revenue. And very good news that TV media adjusted OIBDA grew 5% year over year, as they're saying, despite macro headwinds, which I can really agree. 2022 was not easy for all of the subscribers, or not subscribers, media companies in general, because of advertisement issues, declining advertisement of by the harder macroeconomic environment. And let's move forward. So check it out, the statement from Bob Bakish, the president and CEO. He highlighted that a lot of things, but I will just want to highlight, for example, which content you can find on Paramount, why it's strong as a media company. For example, this year's Madness movie, Top Gun Maverick, it was a massive success, around 1.8 billion revenue for Paramount, and it will be later also. All of these great content at the streaming service, it's later still gives some kind of revenue because people want to watch it again, or some people didn't watch it. Maybe that person will watch it 5, 6, 10 years later. And for example, there is that the Yellowstone franchise and Criminal Minds, which is everyone knows it. It has almost 20 season as far as I know, and it's extremely popular. Um, and the most important, what he said, that they expect to return the company to earnings growth in 2024. This is really important, and this is in line what they said previously. They said that practically 2023 will be peak investment, and from 2024 they will improve their bottom line. So that's good. It's challenging the near term. Let's check it out how it is now. Okay, so all in all, not so great. The financial results for the last quarter and 2022 also. Uh, as we can see, basically the TV media revenue, which is the far most important for Paramount, declined 4% year over year in 2022. This is not so bad, especially there were some currency headwinds. I think around 2%. They mentioned it somewhere, and and the macroeconomic environment. But still, it's a decline. It is a hard business because of cord cutting. A lot of people leaving normal TV to streaming. That's why Paramount also went to streaming to keep up with changing world. And now uh, let's go on to direct to consumer, which is a really good and bright spot of the company. In 2021, its revenue from direct to consumer was 3.3 billion. Now it's almost 5. The run rate is around more than 5.5 billion, kind of. So it's growing every quarter. And filmed entertainment was also really good because mostly of Top Gun, and Paramount had 6 movies, which was extremely successful this year. But at the end, operating income was, for example, the last quarter was really bad. Like last year it was 2.6 billion, and now it's 182 million. That's 93% decline. Or let's check the full year. It's 63% decline. That's also a lot. Uh, we need to add that 2021 was there were some asset sales also, so it's a little bit boosting it up. Um, but still, it is really expensive to change to streaming, and that's what the market don't like in Paramount. As we can see, basically, mm, 1 year ago, Paramount was $27, and there was some time when it was 38, and now it's 23. But it was 17. There was really like a rock bottom. Uh, and if we check it, that was that craziness by Archegos Capital in 2021 when the stock price was $96. That was crazy. Yes, but this company was actually really smart that they issued more shares at that time, and that was smart capital movement or use of capital. And since that time, Paramount is in the, how to say, like a little bit in the dumpster. The market don't like it. If we check it like before COVID and everything, all of the streaming, it was around 40, $50, depends on the share price. So now it's 23, half of that price. It, you can feel it that from that there it can be an opportunity. But let's go back to basically to the earnings of the fourth quarter. And let's move on to direct to consumer part. And It's clear that it's a success from subscriber numbers. It's a really big, it's better than how the company actually expected. They raised their guidance. Like previously, it was for 2024 around 65 million, and last year at the beginning of last year they raised it to around 100 million. That's like a really big change. And what is different in Paramount than the other streaming services? As Bob Bakish always say that they have a different approach, a differentiated playbook than the others, and this means that it's a partnership based approach in some cases. For example, you can see that they made partnerships with Walmart. Walmart, for example, Walmart members get Paramount Plus also, which is great for subscribing. We will see how actually these partnerships end. That how beneficial will be for Paramount. Maybe some will be bad, maybe some will be good. We will see. It's just like new, really new ones. And they made a deal with Delta. So on the air at Delta Airlines, some people who have membership at Delta they can watch Paramount Plus. However, those viewers obviously they are not in the subscriber numbers. Only if they will buy it later. But it can be a good driver. And Sky, that's the UK Paramount Plus. That's how they went to the UK. And there is Canal Plus, Amazon, and Roku. And also, yeah, like Sky, I didn't mention, but like Sky is also important for all most of the Europe because, for example, they started just now in February in most of Eastern Europe with as Sky Showtime. So there is Sky, Paramount Plus, all of the content from that, and plus Showtime. So it is basically everything. However, it's more limited actually than in the US at the end because not full of the seasons are there as we can see now. So we will see how it ends in Eastern Europe, but it's definitely cheaper than the competitors. It's a different playbook. And yeah, they highlighted that Paramount Plus is the first premium streaming service in domestic signups and gross subscriber additions, and had the most signups in 2022. And Pluto TV increased global MAUs by 6.5 million in the quarter. That's really good because Pluto TV is older actually than Paramount Plus. It is a little bit older, so it's more mature kind of, and they expanded it to Canada. And a really important thing is that they grew global total viewing hours and strong double digits quarter over quarter and year over year. This and the bad thing or good thing, I would take it as bad that advertising revenue rose only 4% year over year. Um, the management said that it's like challenging environment, but if you grow so much your subscribers, you should grow also your advertising revenue a little bit more than that. Uh, but all in all, the revenue increased by a lot because of subscription. However, adjusted OIBDA decreased 73 million year over year. This is reflecting investments in content and international expansion. As we said, Paramount in 2023 is the peak investment year. Uh, and let's check that segment a little bit in more detail. So, as we can see now, in 2022, it's almost 5 billion, the revenue. 1.5 from advertising, and 3.3 from subscription. So more subscription than advertising, but advertising is also an important part. The expenses are where there are the problems. 6.7 billion are the expenses for that 12 months. It was a year ago 4.3, which is already much higher than 2022 or 2020. Um, yeah, so expenses are going up like crazy. Um, we will get back to that soon, so stay tuned. But let's check the TV media segment, which is the most important for Paramount. That's why it is like a cash flow machine still. Uh, and we can see here in summary why it is so successful. 7 of the top 10 and 14 of the top 20 entertainment shows, including the first drama and overall show in NCIS, the first comedy in Young Sheldon, and the first new show in Fire Country. So CBS is a leading uh, channel, or like, yes, channel or broadcaster in the US. Um, as I mentioned previously, Yellowstone was important, and they are also popular for kids. This is important. Nickelodeon, everyone knows Nickelodeon, and SpongeBob and those kind of movies. And yes, for first portfolio in linear TV membership. Mm, Fire Country, it was new, Young Sheldon. So there are a lot of content. And here is the good news that adjusted OIBDA increased 5% year over year, as the revenue decline was more than offset by lower cost. So there is some kind of cost cutting or cost control, at least for that part of the business. This is good, I think, to sustain the company. We can see that the revenue is around 22 billion per year, 22 billion, and it's kind of like well shared advertising, affiliate, and licensing. Uh, it's stable. I would say it's stable around 6 billion OIBDA per year. Um, Now it's decreased, but it's not a bad result. 7% decrease, some kind of FX because of the strong dollar, like 2%, and the advertising environment is weak. So it is all in all, it's not a bad result. Kind of they can sustain their level, which is good to hear, because everyone is really scared that Paramount will lose most of it OIBDA as cord cutting. Okay, so now let's move to basically what they said previously. It's always important to check it at every company, what they said and how they fulfill their promises practically. This is from early 2022 investor presentation. Okay, so it was the last quarter of 2021, the results. And from here, the important part, this is, for example, important that Paramount is going through a massive net debt reduction, which is really useful, especially current environment when the interest rates are high. And they decreased it from 2019 to 21 the net debt by 7 billion. That's really great. And now it's not 6 billion. The cash balance, it's around 3. Um, and the net debt is around the same kind of. So it is fine. 11 billion. This is not so much alarming of that compared to the market cap or everything, or the EBITDA. And from here, the most important thing what they were telling is one is that the ARPU was $9 in end of 2021. Netflix had at that time around 16. So it's a little bit more than half, but it's not a bad one for just kind of a starter streaming business. Okay, not fully starter, but not as much old as Netflix. But let's move on their goals, and this is where everything comes for my thesis of investing in Paramount. And so global D2C subscribers. The prior goal was 65-75 million. I mentioned it at the beginning of the video. Now it's around 100 million plus subscribers. And this is not including Pluto TV. That's important. If you think about it, we are already at 70. Let's go back, 72 million, 77 million subscribers. So we are on a good track to reach or Paramount is on a good track to reach 100 million in 2024. It is highly probable because they are just the subscriber numbers will go much higher in Europe in the new markets, and probably in the USA and Canada also a little bit, but Europe and the other part of the world will be the big driver. And Europe ARPU is also not bad. Western Europe. Okay, so we saw that they are on track with that. Mm, Pluto TV 100 million. It's also on track still. Every quarter they are on track, and this is the most important chart for the thesis, or the first of the two, which is important. Global DTC revenue, direct to consumer revenue. Prior 2024, the goal was 6 billion. Now it's around 9 billion plus. Let's check how they are currently. So it means around 5 billion, but the run rate is already 5.5 billion because the last quarter was 1.4 billion. So it's more than 5 billion. It's pretty stable actually. It's not so much fluctuating as some other companies. In the fourth quarter is the strongest. Okay, so we see that 9 billion is is probable because 5 billion, and we will have more subscribers, and also they mentioned that they will raise the prices of Paramount Plus at the merge Paramount Plus and Showtime by $2 from 9.99 to 11.99, and also the ad supported version to from 4.99 to 5.99. This is practically a 20% increase. That's a lot. It will drive revenue, and Paramount is still on the cheaper side of the streaming services, so there is more uh, room to grow later. And all of the streamers said that they will raise prices, so it is probably not a problem to reach that 9 billion. Let's move back and okay, so content expense, that's where the that's where we are in trouble now, that they are spending so much on content that they are losing money a lot on streaming. uh, they raised that it's not a good uh, sign, and they said that in 2024 it will be 6 billion plus. The problem is we are already at 6.7 billion now in 2022. However, I think from now on they said that okay, 2023 is peak investment. A lot of new countries they are going, think about it, you need to promote all of the, like, the service. It costs a lot of money. You need to promote everywhere on social media, on the streets, to really gain traction. And so that's why we are higher. And I would say maybe in 2023 it will be even like around 8 billion. They didn't say anything about that exactly, but if we are already at 6.7 and peak investment, probably it will increase more. But let's go to the thesis. Why Paramount now is a buy? Uh, Paramount is a buy because if and when streaming become profitable, the bottom line will significantly become better. And as I said, their projected DTC expense was 6 billion. We are already at 6.8. Higher than 8 billion is not likely. I said talked about the revenue goal. You can actually stop the video here if you would like to just save that thesis or just to read it out. And so we know those numbers. Let's have assumptions. It's very basic assumptions, but I always say like good investments do not require a lot of assumptions and an insane amount of calculations. Good investments are not complicated. And so let's say 8 billion expenses, 9 billion revenue. This is 1 billion OIBDA. We are calculating in OIBDA now, which for the total company actually means plus 3 billion more than now. Let's go back here. 1.8 billion negative OIBDA for D2C in 2022. So it's 3 billion plus. This is very likely. Uh, and let's go back. So if we add 3 billion to that one, 3.2 billion, this is 6 billion OIBDA. 6 billion OIBDA. And okay, so what does that mean? It means that in 2019, when it was no streaming spending, kind of, so their OIBDA was 5.5 billion. It almost doubled the share price than now, as I showed previously. It was around 45-50 dollars, uh, which in the base we can expect that if they reach that 5.56 billion OIBDA, which means at the end actually around 2 billion in free cash flow. We will check it on Seeking Alpha in 1 second. So it means that you can basically high. It's very likely that you can double your money by end of 2022, and which would result 25% yearly return. Okay, but there is a risk. The biggest risk is that faster than expected declining legacy business. I don't think it's very likely that the legacy business will decline fast in the next 3 to 5 years, because as we can see, it was 5% decline this year, but very weak environment or weaker environment than in 2021. I would say it was kind of the same. If we would put the same environment, maybe even it would be better this year, and they can always cut costs. So yes, I would say it's more of a mind risk for a Wall Street analyst than an actual really big risk. The bigger risk is if they cannot reach scale in streaming. That's a risk, uh, but also unlikely, because Paramount has such a big content library, and so it's unlikely. They have MTV, Showtime, CBS, Paramount, Nickelodeon. You can just just tell and tell all over again. Let's check a little bit, a few more things. One thing was that this is a report from the last quarter of 2019. It was a really different report, and this is what I said. It was 5.5 billion in 2019, and diluted EPS for that was around $5. Free cash flow 1.2, but it was some kind of issue. So it's around 2 billion in adjusted free cash flow. We can check uh, financials, income statement, and let's check net income. Yes, net income around last 2022 was 1 billion, but all in all, in general, it was around 2 billion, the net income. It was some asset sale in 2021, 2 billion. We can expect it's kind of the legacy business is capable for 2 billion now. The market cap of Paramount is 15 billion now. It means that a 10 times multiple is probably fair, so we are already undervalued by 25-30%. And if the streaming becomes better and they can reach more, like maybe 3 billion, they actually said that they want a legacy like margin in legacy business like margin in DTC, uh, and so it would be more than 2 billion, around 3 billion. So this is when it's double at least. This is what we found. And if the market is cheering for that, it can be 15th multiple, and it's more than that. It's a triple in that case. But I would say a double is reasonable. And lastly, just a little bit check what they said in the last quarter. I just downloaded from Seeking Alpha practically the earnings call transcript, and I highlighted some things which are important. Um, yes, here they say that one that achieves TV media like margins, profitable streaming business, one that achieves TV media like margins. And this is important. Bob Bakish said that he wanted to point out that CBS original cross-platform content is performing at a level comparable to Netflix. In fourth quarter, US viewers spent 370 billion minutes consuming CBS content alone on both linear and digital. That's virtually the same amount of time of viewers as viewers spent with Netflix substantially larger entire slate of originals. This is huge. So it's like they are on the same league, we can say. Uh, of course, in streaming, Paramount is behind, but they can catch up. Practically, that's it, everyone. So I hope you enjoyed that video. Please subscribe if you like the content and drop a like. Thank you very much for watching it.